Welcome, ladies and gentlemen, to Commodity TV and a new online edition of our interview update series. Yeah, we want to get, of course, because so many good news, an update from Canada Nickel, and Mark Selby, the CEO, is here with us. Good morning, Mark. How are you? You must be happy.
Great to see you. Oh yeah, no, it's been a great several weeks.
Yeah, great to see you too. And I'm a shareholder of the company. I want to disclose that also upfront because I think this is the best nickel project in the world, definitely in the making here. And as I said already, you must be very happy because you secured like two heavy milestones in your financing package. I think it was like $500 million from the Export Development Agency in Canada, which is a state
Yeah,
agency, and I think another 500 million Canadian dollars from a
yeah,
financial institution. So that's a big chunk. Altogether, you have like 1.9, $2 billion to finance, right?
yep, yeah. So
So looks good.
yeah, no. Those were two major steps forward. So we're putting together a financing package. The total capital
Mhm.
cost is just under 2 billion. But again, when you finance a project, you have to have additional money on top to finance in terms of financing costs. So we're targeting $2.5 billion, a
Mhm.
billion and a half debt, and $1 billion of equity capital. And
Mhm.
so having both of those pieces, that's just under 900 million US dollars. So that gets us along part of the way to a $1.5 billion. But
Mhm.
what's exciting about that is, having getting that support letter from Export Development Canada was very important. Not only for the 500 million US dollars, but the
Mhm.
fact that they're willing to work as mandated lead arranger for the entire facility.
Mhm.
We will be buying lots of equipment from different countries, and have one partner in Korea and potentially partners from elsewhere. And so, the other export development agencies globally really look to EDC as a leader in the mining space. And so, the good part there is, and all the due diligence we do with them, the other ECAs will just follow along. So, at this point, with them involved, and we get through the next phases of due diligence, that puts us in good stead to have that $1.5 billion largely complete. And then on the equity side, the thing we've been really emphasizing is the fact that we qualify for over $600 million US in refundable tax credits from the Canadian government. And so we're
Mhm.
looking to someone to basically bridge that money so we can use it as equity. We've got 100 million US from Samsung if they exercise their option to get the offtake from the project. And that, right now we're just solving for 300 to 400 million US dollars. So I know 2 billion sounds big, but we're
Yeah.
really right now down to focusing on that last 300 to 400 million dollars, which is fantastic. And we're working with
Mhm.
Scotia and Deutsche Bank to get that done by year end.
Mhm. Could you also think about, let's say, a convertible, for example, at higher prices then, or would that be really like straightforward equity, meaning with 400 million dollars, you have to emit like 300 million shares?
Oh no, zero shares. This is three to four
Uh-huh.
hundred million dollars to buy 20 to 30% of Crawford. That's what we're working towards,
That's
or
important.
or
Okay.
some sort of structured note,
Mhm.
attached to the project, so that
Mhm.
there's no dilution, at the top co. There will be times where we may have to top up the tank a little bit, but
Mhm.
for right now, we're focused on getting the project financing for Crawford without having to do any kind of meaningful equity raise.
Yeah, because I think this is really important. We had several shareholders who contacted us through Commodity TV and said, yeah, well, maybe they have to do 200, 300 million shares in addition. It was not so clear. So that is really clear now. That means really dilution only, let's say, as you said, to top up, let's say we talk maybe about 50 million shares in the future. That's it. I'm just guessing now. That's hypothetical. Yeah. And then you are fine.
Yeah, and hopefully even less than that. I mean,
Yeah, I hope so
as
too.
a shareholder,
Me
who's
too.
been in this for 6 years,
Yeah.
again, very proud of this project. We
Mhm.
want to take it forward, but I'm not going to, it's not my pet project that I want to get built, regardless of what happens, to the share price.
Yeah.
At the end of the day, I have most of my net worth in the company, and
Mhm.
want to see a return on that going
Mhm.
forward. So.
Okay, super. Before we move on with the project, I have another question regarding the nickel supply demand side. Yeah, I
Yeah,
found in your presentation that you say, yeah, probably 5.1 million tons by 2030.
yeah,
Yeah, which is, let's say, almost 70, 80% higher than 2022.
yeah,
um, which is really interesting because I found yesterday I did some research on nickel and I found from the International Energy Agency
Yeah,
that they said 6.1 million tons by 2040.
right.
And I found that really interesting because you're both going into the right direction, one thing.
Yeah,
And on the other hand, I found it really interesting that in the International Energy Agency report, there was all the time after 2020, yeah, six, I would say, all the time like a slight deficit in the market.
right.
On the other hand, we see Indonesia ramping up furthermore. I think it's 928,000 tons, which comes into the play over the next 2 years. But you wrote in the HPAL process with Indonesia that then maybe they limit the market. So um, would that be the same, yeah, let's say, strategy from Indonesia now to bring down the market to kill some producers, then to dominate the market, and then you say, oh, by the way, we have to see where we export. So I think your project is for the free Western world super important, isn't it?
Yeah. On that, there's really sort of three key pieces. So first off, in terms of demand, what so many analysts get wrong
Hmm.
is the growth in the stainless steel market. Again, people always talk about nickel and electric vehicles, but
Yeah.
2/3 of nickel demand today is still stainless steel, and then families of related alloys. It has grown at 5 to 6% a year. You take various stretches of time, and that's been the case, and we've
Hmm.
grown at 5%, since 2020. And the reason it's a high growth material is it doesn't corrode, so it has great long life cycle costs. It has high strength to weight ratio, which in everything today is engineering wise is really important, and it's highly recyclable. Right, so it's no surprise that aluminum and stainless steel, which both share those characteristics, both grow at 5% plus rates. All the analysts who are used to carbon steel and other things always have that number trending back to 3%.
Hmm.
And the challenge is if you take 3% and you take it out 5, 7, 10, 15 years,
Hmm.
that
That's a
2%
lot.
compounded is a huge number. And
Hmm.
so I've been in this market for 22 years. I see it happen all the time. And that's where, demand has been much higher than most analysts have forecast, historically. And so, when you factor 5% in, I'm sure IEA probably has 3% stainless demand growth. And so when you factor in 5%, all of a sudden that 6 million in 2040 probably ends up closer to 7.5
Hmm.
at that point in time. So demand, again, first three part of the year has been 10% per year. So
Hmm.
if we keep that going till the end of the decade, we're at 6 million tons by 2030, not
Yeah.
2040. So demand side, we're in great shape. On the supply side, yeah, we're seeing huge amounts of supply come from Indonesia, but the key thing is, I'm just here at a stainless steel conference in Europe, is that Indonesia, people think, oh, it's got this unlimited amount of ore, but
Hmm.
the reality is the Indonesian government has already restricted supply, by slowing down the licenses. But because they've been high grading for nickel content, they've been high grading for iron to nickel ratio, they've been high grading for the slag chemistry, so they don't have to add other materials in,
Okay.
to get the slag chemistry right. The average grade of the nickel pig iron has actually been that they produce has been dropping, which is effectively derating their capacity. And the latest numbers for July, they imported ore from the Philippines, and they've started
Aha.
at the beginning of the year, and that's ramped up. And the amount of ore nickel and ore that they ramped up in July is equal to 5% of global supply.
Hmm.
So, if they're if they're, have so much ore, why are they importing all this ore from the Philippines? So, because the nickel grade is really falling off there,
Hmm.
the risk for this is more on the nickel pig iron side, and then the matte, which is still the bulk of production out of Indonesia. There's a real risk to that grow, that growing not nearly as quickly, as a lot of people think. So, that's something to watch going forward. So again, I'm not concerned about Indonesian supply. The other
Hmm.
key piece of it, nickel and stainless steel is about 10 to 15% of their global exports. It helped the country become having a trade surplus and a current account surplus. And so to think, and they control more of the market now than OPEC. So to think, they are going to basically reduce the amount of money the country's making by tanking the nickel price is a little absurd. So
Yeah, makes no sense.
yeah. So I think we've sort of bounced off $15,000 or $16,000 a ton, which is double the
Hmm.
last bottom that we had in the market. So I think going forward on a supply side, I'm again not afraid of supply. We're going to see lots of HPAL come out
Hmm.
now because that's
Hmm.
where they do have some more availability. But I think the risk there is that it's going to surprise the market. They may not be able to keep up the pace that they've been
Hmm.
going. And then the third thing is local markets, right? Is unfortunately the world of free trade and everybody trades with everybody is now
Hmm.
completely gone. And so you you're seeing these sort of fortresses going up in terms of the U.S. putting higher tariffs on. You've seen Europe looking to discourage imports from different parts of the world, and so there's hundreds of gigawatts of battery plants being built, in the United States and in Europe. Most of those battery plants are going to use high nickel chemistry batteries, and so there's literally, if you have 100 gigawatts, you have close to 100,000 tons of nickel that's required for 100 gigawatts, and so there's going to be huge demand growth, and there's almost no new projects in the only a handful of new projects in the pipeline, of which
Hmm.
we're one. So the ability to be new local source production in North America and also process it locally
Hmm.
is a huge advantage, and that's why we've seen it's no surprise that Export Development Canada, government
Hmm.
agency, is taking the lead here in terms of helping us get our financing, and you'll see lots of other sort of government financing support come down the pipe over the next year.
Hmm. Absolutely. I think also something is really missing, because when I look in Europe, we have the supply chain law. Yeah, which has to be ESG conform, CO2 emissions, etc. And I think the Indonesian nickel is, let's call it, quite dirty, to be friendly,
Yeah.
because I read a huge article in the Geoscience magazine, which really, yeah, was taking care on that problem. And when I look also at the videos, to me, honestly, I think they really do not care as we do about the environment, or you do in Canada with your
Yeah.
project.
Oh no, for sure. I mean, I've started referring to that nickel from Indonesia as blood nickels, or like we had blood diamonds, blood
Mm.
cobalt, because it's not just. I mean, it has a massive carbon footprint, and people have
Hmm.
been focusing on that for the last 4 or 5 years. But unfortunately, the way they mine it, they turn, and again, encourage people to find videos on it.
Yep.
All the streams are orange, the ocean and the coast is
Yep.
orange.
It looks terrible.
Yeah, because
Hmm.
they're again mining to try and produce at the lowest cost possible, and forgetting about the environment. There's no reason for a kilo of dirt to make its way into a stream.
Hmm.
There are
Yep.
ways in a monsoon climate to manage the water flow on a
Hmm.
site, so none of that water ends up in the environment. Vale, PT Inco, it's Inco where I used to work, built the mine on in central Indonesia, the first producer there, and again, they've been mining there now for the last while, and there's no discharge in that lake. You can go look at video, and that lake is right next to their mining operation. And so
Hmm.
um, the fact that people kind of turn a blind eye to all of the devastation that's happening to those communities along there is horrific, actually. So
Hmm. Yeah, absolutely. Okay, let's move back to the project. Thanks
yeah.
for the excursus here into the nickel market. That's great. Um, Yeah. So what is next? On the one hand, on the other hand, I think you have done also a lot already to, yeah, enlarge the team to
Yeah.
get things built. So from that side, you are fine. What else need to be done now? Let's say on the fast track with the permitting, etc.
Yeah. So the two other streams in addition to the financing are the permitting and the engineering. So on the permitting front, within a few weeks here, we're going to be starting to file our environmental impact statement, and we hope to have that complete by the end of October.
Hmm.
That will complete the second stage of the federal permitting process. That then puts the government on a 365-day clock to come back with a yes/no answer. Uh, they've talked about going faster, and it's that third phase where the government really only has much discretion about going faster. So we believe we're on track to be able to get those permits by mid next year. We're in the process of filing all our required provincial permits, and we're sequencing that to have them arrive by mid next year, so that again we're in a place where we can we'll be able to have all our permits in place, and then that's why we want to get the funding package in place by early next year, so that we're
Yeah.
ready to go on that front. So permitting is going very very well, and on the engineering front, we're just wrapping up the front end engineering design. So you increase the amount of engineering from 10% to 30%, so
Mhm.
that you have the information you need to be able to start ordering long lead items, that need to show up as you're building the project. So again,
Mhm.
that's gone quite well.
Okay, so I could assume you are really focused now almost 100% on building the project, but you have still a lot of other, yeah, let's call it exploration projects and targets, which are much, much larger even than Crawford.
Yeah.
So how is it going there? I think you had very good drill results from Reed, right?
Reed, and then some of the man properties, and then
Hmm.
we talked about we had one of the best holes we've had to date at our Texmont property.
Hmm.
We've been talking about the Timmins Nickel District now for a while, and again, we had a geophysical approach that
Hmm.
has worked out to go quite well. We assembled that package of 20 plus targets, and what's exciting, that release, we had drilling results on 7 different properties, right? The most companies are happy if they have one good target to drill.
Yeah.
The fact that we had successful results on that many properties, I think, really speaks to the potential scale and quality of the targets that we have. And so the really exciting part is now that we're getting Crawford this close, and then we have a whole pipeline of other projects, some of which will be even bigger in scale than
Hmm.
Crawford, is the ability to then just cut and paste, what we've designed for Crawford, and roll that out to those other properties. So yeah, it's been really rewarding on that front to see the success that we've had with those targets. And again, we'll have a lot more drilling results through the end of the year. And I think people really start to get the scale of what we've got. Reed is a monster. I mean, it's more,
Hmm.
it's the same strike length as our Crawford deposits, but it's more than twice the width. And from a mining perspective, that means your
Whoa.
strip ratio would be a lot lower. So it's been exciting.
Mhm. So that means for the future, I mean, you have already 41-year mine life with Crawford. Yeah, those numbers look all fantastic. I mean, you have iron ore, you have chrome, you have cobalt in addition, you have PGMs in addition. So the byproducts really almost, yeah, not almost, but they pay for a lot of the production costs. I think it was like $1, what's $1.60 or something, the AISC
Yeah.
for the pound of nickel, which is fantastic, I would say, as nickel is still something like $7 per pound now. But that looks to me like that you said it, you have a nickel district on the one hand. On the other hand, you really could replicate what you have done at Crawford, let's say in 5 years or 7 years, with Reed or Texmont, Midlothian, etc., etc. So that would be like the real nickel monster for the Americas, right?
Yeah, no, we really believe, what we've got the potential to be the world's largest nickel sulfide district. And, the drilling results that we've been showing, are showing,
Mhm.
are beginning to, very much realize that potential. And, the world needs nickel from somewhere other than Indonesia.
Mhm.
There have been
Yeah, absolutely. Or China. Yeah.
there have been very few new discoveries, in
Yeah.
terms of projects in the pipeline,
Hmm.
probably one hand worth. And so, that's the part that's exciting, is not only can we produce nickel at Crawford, but then rolling that around and potentially having a multiple of those projects in that area. And each one of those deposits is hosted in these rocks that spontaneously absorb CO2. So
Hmm.
again, we'll be the Western world's third largest nickel sulfide project if we're fully ramped up, but will also be one of Canada's largest carbon storage facilities and store over 1.5 million tons of CO2 per year. And so again, you look at all of those other projects with all of that other carbon storage capacity, and you really are looking at, what we're discussing now with government is really looking at Northeast Ontario as a whole zero carbon industrial cluster anchored by, multiple nickel mines in the
Hmm.
region. So, we think we can be the clean green alternative to Indonesian nickel.
Yeah, absolutely. Because you have like a net zero negative footprint, right? Because you
Yes,
can
with the mining
store more
operation.
CO2, including the CO2 you need to produce 1 ton of nickel. So that
Yeah,
is amazing.
yeah,
That's exactly what we need.
yeah. No, 100%,
Yeah.
100%.
Yeah, absolutely. Super. You have also three large partners already in. You said it already, Samsung, SDI, on also on the project side, but they have also like a, I think it was like around 8% stake.
Yeah.
You have Agnico Eagle, which is the
Mhm.
largest Canadian miner,
Yeah.
and a great company, of course, which I
Yes.
know really well. And you have Anglo American, which is super active in, yeah, I would say collecting good projects.
Yeah. Yeah.
So why has not BHP or Rio Tinto knocked on your door saying, hey guys, you know what, that's exactly what we are searching for? Because to me, it looks like you can produce the next, whatever, 50, 100 years out of that.
Yeah, so I mean, unfortunately, BHP is listening to some bad market consultants. So
Hmm.
back in February, they published on February 20th, they published their updated economic and forecasting quarterly report, and in there they said we don't believe, based on our analysis, the nickel market won't be in balance until
Yes.
2030, and earliest it'll be 2026.
Hmm.
9 days later, Jim Lennon, who's the best nickel market analyst, had said, "Oh, I've been to China. It turns out that they undercounted their stainless steel production, that undercounted nickel demand to the tune of 150,000 tons, or about 5%
Oops.
of
Hmm.
supply." So he updated all his forecasts for 20 with numbers for 2023 and his forecast. And at that point, he published a report 9 days later that said, the market, will be in a small surplus this year, and the risk, if Indonesian supply doesn't ramp up enough, or we see a big restock in the electric vehicle market, that the market could be in deficit this year.
Hmm.
Not 2026, not 2030, this year. And so, that's so again, BHP shutting down all of their Western Australian operations because they haven't
Yep.
invested in those, and they're high cost, and that's more about operating costs in Western Australia
Hmm.
than elsewhere. So, because there's that overhang, they're sitting on the sidelines. But at the end of the day, they ended up in a bidding war with Wailu to buy Noront. That was a 12-cent stock that ended up going out at $1.10. So we'll see in another year or two what happens.
Hmm. Okay, super. I have another question because we are always talking about stainless steel. What is
Yeah.
about energy storage in the future? Because one thing came to my mind this week when I was reading France was selling power on negative prices. And that
Yes.
is crazy because France is generating almost 80, 82% from nuclear,
Yeah.
but they had so much solar and wind the
Yeah.
last week that during the day they could not really consume everything, so they sold on a negative price to Germany, to wherever, to the neighbors. Yeah,
Yeah.
so that raised up the question in my mind, why we are not investing more heavily, which I guess is coming now, into energy storage possibilities, which would maybe consume also a lot of nickel, because I don't hear anything about it. What's your view on that?
No, energy storage. Again, people talk about electric vehicles, but there's also trucks.
Hmm.
There's all kinds of other things that
Hmm.
can use nickel batteries, and then energy storage is another one. Now, there's a range of battery chemistries that are there, but I just saw a news item that Samsung actually just came up with a new battery pack that's a
Yeah,
high nickel battery for energy storage. So
but that's also silver in
Yes. Oh
that
no, for
battery.
sure. No, no. I
Hmm.
mean, at the end of the day, solar works for 8 to 12 hours a day based on where you are
Exactly.
in the world, and then
Yeah.
it's not there for the other 12 hours. So, by definition, all of this solar install is going to require a certain amount of storage, to make it effective to the grid. So, yeah, no, 100%. There's going to be a real market there, and that's something we're thinking about as we go. We'll be using trucks with batteries in them. That's where the market is headed with big mining trucks. We're using trolley
Hmm.
trucks to start, but they'll have a battery in there at some point in the future. And then what we're thinking about is basically using those spent battery packs as energy storage, because there's basically market pricing for energy. If you can find a way to limit your load and basically pick up energy when it's cheap and sell
Hmm.
it back when it's expensive, that's a massive opportunity. So yeah, no, storage is another huge growth market.
Okay, super. Yeah, because I have sometimes the feeling this is not really factored into the demand side. Yeah.
Oh no, there's again, people don't talk about trucks. Again, there's for small vans and fleets doing local
Mhm.
deliveries, lithium iron phosphate is fine because you don't need a large range. But
Mhm.
if you want to have an electric, sort of road truck,
Mhm.
then from a battery perspective, it has to be nickel to have the energy
Yep.
density that's there. So
Yep. Okay, super. Last question. Are you financed, let's say, to go through that project financing period, permitting period? What's the status in the company?
yeah, so to get all the way to the end, we, later next year we'll have to have start ordering long lead items, right?
Hmm.
And then we'll start to ramp up the detail engineering. But that's more out in 2025. And so, the other part in terms of timing, getting that partner in place, for early January, is as part of that we'll be asking them to say, look, if you want the project to start in June, some of that you can pay us some of that money on the project start, but you're going to need to pay some of that money up front. So
Mm.
that's the structure that we're going to be looking at to be able to
Mhm.
get those funds through the door that we need for 2025.
Okay, super. Perfect. Mark, thank you very much. It was a great half an hour. Honestly, I learned a lot. And I'm even more positive on Canada Nickel and your project. And to me, it really looks like with those two major milestones you have achieved in the debt, call it debt financing, I think this is one of the real, yeah, big game changers. What you need to have the rest saying, oh, yes, wow, the state is in. We have to move, right?
Yeah. No, and again, with these pieces coming, we're starting to get some real momentum. So, I think it's going to be exciting 12 months.
Super. Perfect. Mark, thank you very much. I wish you all the best, and I'm pretty sure we talk soon. Super. Thank you. Yeah, ladies and gentlemen, that was Mark Selby, the CEO of Canada Nickel. And yeah, you heard it. One of the best and even the largest nickel project in the world after Norilsk and after the Xinjiang in China. And that's exactly what we need in the Western world. We need our own nickel supply. We need to get independent really from Indonesia, from China, from countries which are, yeah, let's say, not really taking care on the environment on the one hand. On the other hand, it's important that you cannot be pressed from the market side. And demand supply looks really great. So from that perspective, everything is fine. Canada Nickel is the choice to be in the nickel market, one of the choices definitely. And we have our first price target is approximately $2.25 to $2.50. In the longer term, we see again the $4 to $4.50. So thank you very much for watching us. All the best and bye bye from Switzerland.